to everyone. I trust that you are well and that you were able to attempt the question as would have stated in your last class. But even if you didn't get to attempt it, that's what we'll be looking at this evening. So did anybody get to do anything else with the question? Did you get to do anything else with the question? Or Rakim say he forgot? Okay.
Mama try, but I ain't got nowhere really because I was lost. I
Okay.
got real with the
Okay.
splitting.
Oh, okay. All right. So you get a little lost with the splitting. Okay. So let's look back at the question and then go back to our spreadsheet. All right, this is the question here. It says Pamela Layne. So these are the original partners. The original partners are Pamela Layne and Sue Hart. So those are our original partners. So you have Layne and you have Hart. These are the original partners here. And the original agreement is between Layne and Hart. They're sharing the profits and losses equally. The interest on capital is 6%. The interest on drawings is 4%. You have your trial balance. I think we would have looked at the sales, the cost of sales, and then we looked at the gross profit. So we were supposed to go with the revenue. That's where we were supposed to start. So we would have looked at our sales, look at our cost of sales, and we were supposed to be going here with the revenue of what we were supposed to be doing. Also, these are the capital accounts of the partners, all three of them. But please note that these two here, the 65,000 and the 62,000, this is opening capital for these two parts. So this is opening, this is at the beginning. So this is opening capital for these two persons here at the beginning. Okay, so that's opening capital. This is what Brown's capital was at the end of the financial year, because this is what he would have come in with. She came in with $75,000. Okay, this is Brown's capital that she put in cash. These are the current accounts for the partners. So only Layne and Hart has a current account. Brown will not have a current account because Brown is now coming in. So Brown has a current account when we do it at the end, but at the beginning, Brown would not have a current account, okay? Because Brown was not in the partnership from before. Hold on a minute, excuse me a minute, please. Right, so these are the current accounts. Layne has a debit balance and Hart has a credit balance. Also, Hart loaned the business $6,000, and this $200 here is interest that Hart would have already received. All right, and then you have the drawings. So Layne withdrew. The dates are important. When you look at drawings, the dates are important when it comes to drawings. Layne withdrew $2,400 on August 1st, Hart $1,500 on October 1st, and Brown $2,000 on March 23rd, 2013. So then Hart decided to retire. So Hart retiring at October 31st. That's important to note for our change. And Brandy Brown came in, we know, on the 1st of November, and she invested $75,000 cash. She's entitled to 2/5 of the profit from the new partnership. So the new partnership now is between Layne and Brown. So the new partnership will be Layne and Brown. So this is the new partnership, Layne and Brown. And this is the agreement down here. 2/5 of the profit is to Brown. So that means the other 3/5 is to Layne. The partners agree that interest on capital will continue at the old rate. So they have interest on capital, and the old rate was 6%. So that would be the same 6% for the interest on capital. If you go back up here, it was 6%. So that is still the same 6%, but there's no interest on drawings. So the new agreement don't give you any interest on drawings. Layne is now entitled to a salary of $1,800 a year. You have to be careful with this because it said $1,800 a year. Remember that this is into 8 months of the year, and Brown is guaranteed a profit of $24,000 a year. We've already dealt with this part here. All of this we have dealt with already. We've already come up with the fact that $46,500 out of $186,000. We've already come up with the fact that that is a quarter of the sales were earned when Hart was there. And a quarter is 0.25. If you multiply that by 100, you get 25%. So that there is equals to 25%. So we've come up with the fact that 25% of the sales were earned when Hart was there. So the other 75% was when Brown came in. So therefore, we came up with the fact that 25% of the gross profit was for when Hart was there, and the other 75% for Brown, when Brown is there. At the end of the year, you had selling expenses were prepaid, and the two carriage outwards, all of it was incurred. All was incurred when Hart, before Hart retired. Depreciation on the building is 10% of valuation. All expenses are to be apportioned on a time basis unless indicated otherwise. Right? Hart loan will be repaid on June 30th. So let's look at the spreadsheet. So we just gloss over that, and we're looking at the spreadsheet again. And remember, answer your questions. Right. So here we had to look at revenues, and our revenue was commission received. And I want to find out from you how you would deal with this commission received. So a person's supposed to tell me how they're going to deal with the $1,500 commission received. So how are you going to deal with the $1,500 commission received?
You're gonna split it between the partners?
Yeah, but how are you going to split it? I'm not between you're not splitting it between the partners. You're splitting it between the old and the new agreement. Any split between the partners will come with any sharing, anything to do with the partners can come when you're dealing with interest on drawings. What happened here? My thing just went out. Everybody can still hear me?
That's one.
Yeah.
Oh, my thing just dropped out of the share screen. Anyway, anything to do with interest, anything to do with the partners will start here in the appropriation statement or account when you deal with interest on drawing, interest on capital, salaries, and when you're sharing profits. But once you are in the income statement, you are splitting between an old and a new agreement. That is what you're doing. Okay? So I hope that is clear. Okay, so tell me, Dante, what you think that you should be doing.
Split the 1500. The old agreement is 1500 multiplied by 4 to 12. And new agreement is 1500 by 8 out of 12.
Okay, so Dante said that the old agreement is 1500 by 4 over 12, and the new agreement is 1500 by 8 over 12. So I just want to ask the question, do you all agree with that analysis?
Yes, ma'am.
Agree, because that's what I did.
Okay, so I think it's Shamar for sure that said yes, ma'am, he agreed. And I heard a female voice, can't remember who the female is, said that is what they did. Who the female that respond?
Natisha.
Okay, Natisha said yes, that's what she did. Any other person, everybody else in class agree, or is there someone in the class that disagree with that stance? So we have 3 or 4 persons that are going with 4 on 12 and 8 on 12.
Ma'am, I don't disagree with it, but I remember in a presentation that you had, I read a specific part that said that expenses and revenues related to sales are portioned similarly as gross profit or net profit. So I kind of did that.
Okay,
So
so you say you don't necessarily disagree with it,
disagree.
but you are referring to something else as well.
Yes, please.
Okay, Abiyomi went to say something. Go ahead, Abiyomi.
I saw in the question, or how I understood what it says is that I had to use the 25% of sales was made in hard currency. I thought that you would everything on a 25%.
Okay, okay, all right. So Abiyomi and Raquel says she don't necessarily disagree with what the other is saying, but she's saying something else as well, and Abiyomi is saying something similar to her. Any other person? Quickly, we have a short period of time. Okay, all right. Raquel referred to something, and the something that Raquel referred to, I am going to go to quickly. She referred to a note that you all have, and the note is in the partnership changes, and it is slide 4. So slide 4 in partnership changes. You all are hearing me? I just checking because for every now and then my
ma'am.
right, but my thing keep cutting out, right? So I have to keep checking because it just dropping out, and I don't know why. Okay, let's go. So here, this is slide 4, but note 3 and 4 says the gross profit and net profit is generated in the manner that sales were earned. You can't see anything?
No, Mama, you dropping out. Like you sound going in and out.
Okay, apparently my like having some connection issue, and I don't usually have that issue, but
All right, man, we can see it now. Well, I can see it.
You can see it now?
Yeah, I can see it.
Oh, okay.
Yeah, you can see it now, ma'am.
Oh,
Excuse me.
yes, please.
Just sounds like she having problems. She said she gotta go and come back. That Team's not working.
Oh, it's for some reason my team seems to be doing the same thing as well.
Oh, hi.
Okay. Just on your back end?
Yeah, mine was taking. You won't let me unmute our name.
Oh, okay. All right. Let's see how we manage to get through this evening, okay? Okay, so y'all see my screen now. So it states, so don't let me go into slideshow mode. Let me stay here. Point number 4, 3 says that the gross profit is, it says here the gross profit is generated in a manner that sales were earned in the period. Okay, so therefore your gross profit and net profit is appropriated according to how sales were earned. And then this point here, this is the point that Reka raised. Reka said that expenses and revenues related to sales are appropriated similarly as gross profit, are shared in the same way that you share your gross profit. So the gross profit was shared 25% in the old agreement and 75% in the new agreement. So anything that is related to sales has to be shared in that same manner, that same proportion, where 25% is the old agreement and the 75% will be for the new agreement. But then here it says all other expenses would then be shared on a time basis. So if it's not sales related, it is on a time basis unless stated otherwise in the question. But as long as it is related to sales, it has to be done in the manner of sales. So everybody's clear on that?
A little bit.
Yes,
Okay,
Mom,
so
I was clear
Shamar,
with that.
okay, so Shamar, were you lost?
I'm necessarily lost, but I understand. I understand what he's saying. Just just to put in,
Okay. You
format.
probably understanding why you want to trying to figure out why you will have to do it that way.
Yeah, basically.
Okay, because sales, this is the sales revenue would have generated, right? And you remember that you usually have persons making the salesman, or let's say, okay, not say salesman because that's commission paid, but let's say that you were selling the items for somebody and you as a business is receiving a commission on the sales that you make. So
Yeah.
you're getting money based on sales. So if you're getting money based on sales, then you should share that money in the same manner you earn the sales.
Yes.
Clearer?
Yeah.
Oh, okay. So it's 25% for the old and 1,500 times 75% for the new. Okay, so that's how you split. Anna said she was getting problems with the splitting. So that's how it's done. See here. I hope all goes well this evening. Right. So what did they all calculate for this year? For the old and for the new.
The oil agreement would be 375.
So the old agreement will be 375 and the new is,
What did you say? 1,125.
okay, right, and those two together will give you back the 1,500. Okay, so you have now, using your template. So then here we have, so then we add to get our gross income, so to speak. So 23,725 plus 375. You have gross income. Let me call it that. Is that what we would normally call it if we were doing 100? Gross income of $24,100 under the old agreement, and under the new agreement, it is 71,175 plus 1,125, and that is $72,300. And so that would give us total gross income of $96,400. So now we have our gross income. We are going to look at dealing with our expenses. Okay, so
ma'am.
Yes, please.
So if we just split it by months, we will get penalized.
If you had split it by months, you would have gotten maybe like 1 mark, depending on how the mark scheme was. You may get 1 mark in one area and a half mark in other. So you may probably end up with 1.5 or so, or maybe 2 marks. If it was worth 3 marks, you probably end up 2, 3, or 1.5, something like that. Because you split it incorrectly.
Understandable, ma'am. Thanks.
You're welcome. So the expenses, what is our first expense? The first expense I see is wages. So how are you going to split the wages now? The wages are $21,000. So
I think you was do it on a
time basis. Yes, time basis. So that's 4 on 12 and 21,000 is 8 on 12. Got that, Anna?
Yes, ma'am.
Right. And as I was saying to the other group, when you do the first one, so calculate the first one for me.
7,000.
7,000. When you work out this 7,000, you don't necessarily have to do 21,000 times 8 on 12. You could just subtract 7,000 from the 21,000 and it will give you what it's supposed to be for the new. So what is it for the new?
14,000.
14,000. Right. So then we come here and we add the two of these figures here. So you usually go and add the cross as well. So that first expense.
The
yes,
selling
please.
expense now that we coming to will have to be based off of the percentage, because
yes,
selling expenses will same thing as sales basically.
Yeah, it is related. It's an expense that is related to sales. Yes, please. So you are correct in your analysis. Our next one is office expenses. And when you're doing these expenses, right, be careful. Because when you're doing the expenses, you have to make sure that you read the additional information and that you check that there's nothing there that is prepaid or accrued. Because if there's prepayments and accruals, you have to make an adjustment to the figure that was given to you in the trial balance. Okay, so when you are doing the expenses, make sure that you check your additional information to see if there's anything that was accrued or prepaid. All right.
So after I did the prepayment, or I used the figure that's inside the trial balance, and whatever answer I get out, I will split that answer.
Yes, you split the answer and not the figure from the trial balance. So office expenses is 18,600, so that is times 4 on 12, and 18,600 times 8 on 12. So give me the figures for those for that one as well. Got your calculators out and calculating. And you see that I'm showing my working all the time next to everything that I'm doing.
The oil agreement is 6,200.
Yeah. And the new?
12,400.
So we got our oil and new. The next one we have is carriage outwards. What did they tell us about carriage outwards?
That happened before Hart's retirement.
So it happened before Hart's retirement. They said it was prepared as well.
No, it includes before I looking at selling expenses.
Okay, so they tell you that the carriage outward happened before Hart retirement. So what's supposed to happen? What are you gonna do with that?
All supposed to go on the oil agreement.
Okay, everybody agree that all supposed to go in the oil agreement?
Yes, ma'am.
Okay, so basically persons are in agreement with that. I think I saw, yeah, Rakim agree. Yes, please. So all go to the oil agreement because that carriage outward had nothing to do with with Brown. So therefore Brown should not have to stand responsible for any carriage outward. Okay, he shouldn't have to stand responsible for any carriage outward because it happened before her time. All right. So that is wrong. So there's none in the new agreement. So let's look. The next one we have is selling expenses. So tell me about selling expenses now.
Now this is prepaid.
Okay. So what are you gonna do? So we have selling expenses $8,300. So what are you gonna do? You have to like Danya Yard, I think is in here.
You have to subtract 380 from the 8,300.
Okay, so a later may have to subtract 380 from the 8,300. Oh, and Leah would have given you some feedback. You received it,
Yes,
right?
ma'am.
Okay, good.
Yes, ma'am.
All right. So that is, and that gives me how much?
79.20.
920. And then what we're gonna do now?
Now we split it by the 25 and the
Mm,
35%.
and 75%. Okay, all right. So that's our calculation. So our calculation would be 79 79.20 times 25% and 79.20 times the 75. So times the 25 and the 75%. So that's how we're going to calculate this year. So give me the answers, the numbers for our selling expense.
The all agreement, I have 1,980.
And the new
59.40.
party. Okay, good. All right. So that's our selling expense. And then we have, are there any more expenses? We have selling, any more expenses?
The loan interest.
Okay, somebody tell me loan interest. So what are you gonna do with the loan interest? Tell me how you're gonna calculate that.
That will
Mama
only be done in the all agreement because it got Hart name on it. But I can't begin in the new agreement.
Okay, so you think it's only in the old, you don't think it's going in the new? Where's my teams? Or the person that was speaking before Chloe. Go ahead. Who was it?
That was me, but I split it both ways. But now she says so, I think it kind of makes sense.
All right, Natisha, just tell me what you were thinking before.
Mama split it for 12 and 812.
You split it for 12, 8, 12. Okay, good. So fine. And Chloe said that Chloe, repeat what you said. Something with
I
the heart.
said that it got a loan from Hart,
Mm-hmm.
right? And the loan interest is 200. So I hear saying if the loan interest is 200 and Hart got a loan, that won't necessarily mean that it in the oil agreement because Hart name on it on this loan.
Okay, all right, good.
Mama
So we
see my
heard.
mistake is a loan and not a loan interest. So I write she's so wrong, so to speak.
All right, Natisha. Any other persons? We have a good few people here. What are your thoughts? You should be thinking something because you have to do these questions. You have Destiny, we have Abiyomi, we have Alicia Boying, we have Declan, we have
I kind of agree that it only for Hart. because he was the only person that take out a loan.
Okay, so you thinking Hart, and what are you putting there for Hart? So you only putting it under the old agreement. So how much you put it under the old agreement?
The $200.
Oh, you put in $200. Okay, good. So we have, I call a lot of names. We have Arisha, you have Jessica, you have Jonathan, Jordan, Kian, Kenya, we have Lionel. So you have a good few people here. We have Rashawn, Renisha. So come on, what are your thoughts if this low interest? Your thoughts?
You could ask the question again because they got kicked out.
Okay, the low interest person told me that the next expense is low interest. So I asked them how they're gonna deal with it, how they calculate it. So Chloe was saying that her name alone is on the loan. So she believes the loan interest is just under the old agreement, and she's putting $200 under the old. Jasanta said that I think she's agreeing with Chloe that she just put in $200 under the old. Natisha, how much? Natisha said she was split. Natisha, what are you splitting? What's the amount that you splitting?
Mom, give me a second. I got a call coming in.
Okay, no problem. So is this Alicia telling me no? Alicia telling me she would agree with it only being, or Alicia agreed with it being only in the old agreement. So how much it is that you agree should be only in the old agreement, Alicia? So Layne, let me repeat it for you.
This year 200, mom. I think it should be that.
Okay, so you think it's the 200 as opposed to the old agreement. Okay, all right.
Yeah.
Thank you, Alicia. Layne, you have a thought now on it? Jonathan, no, I said listen, I just calling in as Layne by listening to you. You don't think so? I hope y'all will practice these questions. Hear me? Because you got a test coming up. Yes, Naisha.
I know I might right, but you ain't got to multiply that by 5%.
Okay, so you're multiplying what by 5%?
The loan interest.
The loan interest?
Excuse me, ma'am. It had a note down here that says her existing loan was made to the business July 1st, 2011, and the outstanding to be repaid to the new partnership. Man, what that means?
Okay, they're saying that the $6,000 there that they have for the loan, that Hart gave the partnership that in 2011. That's what they're saying. So they just, in essence, they, oh my gosh. Right. I think I'm back here now. In essence, what I think they're trying to let you know that it was a non-current liability, that it was a long-term loan, by telling you that it was from 2011 and telling you that it's going to be repaid in 2013. They're just letting you know that it was a long-term loan or non-current liability. That is what that part is letting you know. Okay?
Oh, all right.
So they are telling you that the $6,000 that Hart gave as a loan to the partnership, Layne and Brown is going to repay it at the end of the financial year. They're going to pay her that $6,000 at the end of the financial year. That's what so they're basically telling you when she's getting money. Yes, please.
Got my work?
Pardon?
You get my work?
I think I received an email last night, but I think I got that.
I put it in box.
I can't remember if I received an email from you last night. I think I did, but I think I received it after I had started looking at some stuff from some other people, and then I keep dropping in and out. And then I had stopped. So I had a class this morning and I didn't get a chance to go back to check other students' work. Right? But yeah, I saw an email from you, but then I would also look at the I would look at Dropbox. Right? So I will check it not as soon as I finish, but a bit later and probably give you some feedback. So
Ma'am, I
so
split 100.
you split the 200
And like 12,000.
and how you did you split the 200 for the loan interest?
Yes, ma'am. And 575.
2575. What you split the loan interest 2575? Was the loan interest related to sales? Abiyomi?
Oh, ma'am.
Oh, okay. I didn't hear you. Right. So it's not something that it's not an expense that is related to sales. So you can't split it in that manner. You're supposed to split all expenses on a time basis unless they tell you something otherwise. Okay, it's only the expenses that are related to sales that are split the same way you split the gross profit. All right, so I hope that is clear. So we have a lot of back and forth there with respect to that. And let me help you. The loan interest is calculated. Somebody asked a question and I didn't answer the person really. I just heard what they said. I didn't reply. It's not I ignore them. Somebody asked if you don't have to calculate it on 5%. It was I think it did ask them what they were calculating using 5%. The loan interest must be calculated on the loan at a rate of 5% per annum because the question did not tell you what the interest rate was on the loan. And the Partnership Act states that if no interest rate is given, then the interest rate is 5%. So you have to take $6,000 and multiply it by 5%. That's the first thing you have to do. And that gives you $300. So the loan interest is $300. That's the first thing. Loan interest for the year is $300. So I want to correct now some statements that persons were making. Persons were saying things like the loan was just for Hart and therefore the loan interest is just under the old agreement. No, the loan interest is not just under the old agreement because the loan is a loan whether Hart is in the partnership or not, and whether Hart is there or not, Hart is supposed to get interest on the loan. So, and the $200 that you are seeing in the trial balance for loan interest, that $200 is what Hart would have already received out of the full interest that she's supposed to receive for the year. Because remember, they give you an annual rate for interest, and the rate is 5% per annum. So they give you 5%. So the interest for the year is $300. But out of the 300, she already received 2. But that does not mean that you do not record what you are. That does not mean that you should not account for that $300.
So,
It is the
ma'am, 200,
yeah.
200
Go
will
ahead.
go in the old agreement, and in the new agreement, we just put 100 because that's how I getting it.
No, the 300 now has to be split according to the old and new agreement to show how much interest was due to her under the old agreement and how much interest is due under the new agreement. But the fact remains that her full interest is $300 and she's supposed to get $300 interest. It is just that she get 200 during the financial year. They didn't say when she got the 200. She got 200. That's the whole idea. For the financial year, she already got 200. It is just that what she's supposed to receive is 300 in total. So this 300 is split 4 on 12 and 300 times 8 on 12. That's how this is split. Right, that's how that is split. So then the 100 will be here and the 200 here, which gives the 300. Everybody okay with that?
Yes, ma'am.
Sure. We will deal with the 200 when we get to her current account, because right now she's supposed to receive $300 in interest for the year, but the trial balance is showing that out of the 300 she already get 2. But that does not mean that you're supposed to put 2 under the old and 1 under the new, because you don't know when she got the 200. It never stated that she got the 200 before she retired, right? It didn't state that. It just said that she got 200. And remember, from ACCT 100, whenever you have a loan, you must always calculate the interest on the loan. You cannot look at what is in the trial balance, because what is in the trial balance may not be correct. What is in the trial balance is telling you what was already paid or what was already received, but that does not mean that that was the amount that it's supposed to be. You're supposed to always calculate it to find out what the amount supposed to be. That's what you are supposed to do. Is that clear?
Yes, ma'am.
All right, so that's the loan interest. And any more expenses? Any more expenses?
Mama did depreciation, and if you ask why, I don't know. But I do depreciation.
You did depreciation. And what did you do the depreciation on?
I think I did a revaluation.
So that is how much? How much you did it on?
10%, which is 500.
10% on what figure?
5,000 for the revaluation.
5,000?
Yeah, which is for the revaluation. That's where you got the figure from.
What you did. Anybody have any thoughts about the depreciation?
Ma'am, I did it as 10% of the 49,000.
So Joanna said she did 10% of the 49,000. And the question stated number 5, note number 5 stated that depreciation is to be charged. Hold a minute for me, please. Apologies. The note number 5 stated depreciation is to be charged on buildings at a rate of 10% of valuation. Okay, and the value of the building on the retirement of Hart is $49,000. In the trial balance, they have buildings at $54,000, but they said on valuation. So I'm looking at the revalue figure of $49,000. Now I will say to you just like what I said to the other group this morning, right? If you have a friend in the B group, Miss Small is not doing depreciation in this question. She's ignoring note number 5. So do not go to your friend and look at your friend's solution and say, oh, that right, Miss Silly wrong. Because she doing it. No, Miss Small is ignoring the depreciation, but I am doing the depreciation. So she's not doing the depreciation in this question. Because I think there's a bit of maybe some ambiguity that may think there is, but she is not doing the depreciation, but I am. So we are doing the depreciation on the $49,000. So that is $49,000 times 10%. And because we're doing it on the revalue figure, that will be times 8 on 12. So what is my depreciation for the period? So we're looking at it as when this person was here. What's my depreciation? You have to always check that you're hearing me because due to the fact I was getting some issues. What is the depreciation figure?
$32.67.
3267. Okay. Are there any more expenses? Any more expenses?
No, ma'am.
Okay, so no more expenses. So we're going to total our expenses, and we are going to be leaving this off for this evening, and we will come back at it again on Friday. But in the meantime, what you will do is that you will continue with the statement of appropriation. Okay, so we're going to total our expenses. So we have 7,000 plus 6,200 plus 7,000 plus 1980 plus 100 give us total expenses of $22,280. That's under the old. Under the new, 14,000 plus 12,000 plus 400 plus 5940 plus 200 plus 3267 gives us total expenses of 35,807, and the total expenses for the period. So then we get our total expenses for the period. So we can add, you can add across or down. You must come back to the same thing, because if you add the two of these, you should get 58,087. If you add down, you should get 58,087. That's our expenses. So then you're going to subtract your expenses from your gross income. To get your net profit or loss. Okay, so here is 24,100. So 24,100 minus 22,280 gives us a net profit under the old agreement of $1,820, and then 72,300 minus 35,807 gives us a net profit of $36,493, and we have an overall net profit of $38,313. So that's where we're going to leave off for this evening. And what you are supposed to do is to calculate the interest on the drawings. And you know your interest on drawings is going to be added to your net profits here. Then after you get your new figure, you're going to do the interest on capital and your salaries, and we will go from there. So we will come back to this on Friday. At this stage, you all have any additional questions?
No, ma'am.
Okay.
No, ma'am.
Just remember that the video might be a bit choppy. Because of the problems that we were having with the internet. Rakim, exactly what it is that you want to see up here? This is what you want to see, Rakim? Okay, all right. All right, since there are no questions, that's it for this evening. I will see you on Friday at 1 p.m. Okay, Friday at 1 p.m. So have a good evening. You're welcome, Rakim.
Bye,
Bye.
mom.
Bye.
Bye,
Bye,
mom.
mom.
Bye. All right. Bye-bye.
Good evening, man.
Good evening, Jonathan. Very quiet today. Bye, Alicia. Bye-bye.
Mom, you hear that real nice.
Observe.
Thank you.
Mama was gonna compliment for you here too. Look nice.
Thank you. I try to do something with myself instead of being depressed about being home and not being able to come to the classroom. All right.
All
So
right,
y'all have a good afternoon.
Bye.
You too,
All
mom.
right, bye-bye.
Excuse me, ma'am.
Tanisha.
Ma'am, I was wondering if you was getting my work in the Dropbox because they had sent you
For Layne and Hart.
tea and leaf for
Oh,
tea
you,
and leaf and Gavin and Hart.
I sent you a, an email last night with tea and leaf.
Oh, I didn't see it.
Yeah,
I'm
I
gonna check.
think. Let me see. Let me see. You're Renisha. Let me see. Did I send Renisha? Oh no, I didn't send you, Renisha. I didn't send to you. I will have to check back the Dropbox for your tea and leaf. Because I wasn't sure if I probably had checked it before. I think that was probably the issue. So when I started, I didn't sure if it was something new or something old. So I probably didn't check it. So I can always check it and let you know. But
Okay,
send me a WhatsApp message reminding me to check it for you.
Ma'am, I don't have WhatsApp.
Oh, you don't have WhatsApp anymore, Renisha?
No, ma'am. My phone not working.
Oh, but just send me an email then, reminding me to check it for you.
Okay. All right.
All
Bye-bye,
right.
ma'am.
All right, you have a good evening. Bye-bye.